So, good morning also from my side to our high-tech engineering conference. And given that we have a very tight schedule today, I just want to continue straight away with our next presenter, which is Clemens Bilek from Kontron. Clemens has been participating in our conferences quite often so far. So I'm expecting a very interesting presentation. For you who are joining the first time, still some housekeeping points. The meeting is being recorded. All participants are in listen-only modus. After approximately 20 minutes presentation, we will have time for a Q&A session. And in order to ask a question, please use the chat box on the bottom right. And now, without any further delay, I'd like to hand over to you, Clemens. The floor is yours.
Thanks a lot. And a warm welcome from my side. Good to see you again. Let me briefly walk you through the who we are slide of Kontron for those who don't know Kontron that well already. We are a pure play IoT industrial solutions company, member of SDAX, member of TechDAX, headquartered in Austria but listed in Germany with around 1.8 billion of revenues forecasted for this year. We have heavy R&D spending, which is especially useful in view of the markets we are entering and the R&D activity we're pursuing. We're spending more than 10% of our revenues in R&D. We expect this year more than 270 million of EBITDA, and we have consistently achieved a growth of more than 10% over the last years. We're focused on the large and growing B2B IoT market, so we're not doing B2C, we're just focusing on B2B. The number of connected devices is growing more than 30% annually. The number of revenues generated by those connected devices is growing by around 10% annually. We are fully integrated technology platform. That means we're providing hardware and software solutions. A lot of people ask actually, what does Kontron really provide? And I brought you, this is one of our modules. You see it's about the size of my thumb. It's a mini computer like a Raspberry Pi, but in addition to a mini computer, it also has a connectivity. So it provides the connection to other devices via a modem capability. We also have software integrated on all our modules, and therefore we have developed our own operating system, Kontron OS, which is suitable in particular to connect up to 1 million devices in a very secure way. We have a very broad and diversified customer base, around 4,500 customers in total. None of our customers accounts for more than 5% of our revenues. If you take the top 10 customers of Kontron, they account for around 15% of our revenues. So see, it's very diversified from multiple industries. Let's look at the most recent company highlights and Q2 results. We made a big leap in EBITDA from 47 million to almost 100 million in the second quarter. Thereof, though, 48 million as one-off effects from the portfolio streamlining, as we have disposed of the COM business in the course with the negotiations with Congatec and DPAG. We generated strong operating cash flow in the second quarter. It was basically reversed from negative operating cash flow of minus 6.1 million in the second quarter last year to plus 12.9 million, despite the fact that no cash impact from the portfolio streamlining had taken place yet. We also, with regards to the outlook, we've increased our backlog. The book-to-bill ratio stood at 1.23, implying a growth of 23% after the second quarter, and the backlog rose to 2.3 billion, which is in line with the annual revenue plan, as we expect around 1.8 billion of revenues for 2025. We had a strong growth, in particular in the high margin software solutions, while the other businesses were in some cases declining. The growth in the high margin software solutions more than compensated for that. The design win pipeline increased to more than 7.7 billion, driven by the new technologies, including Kontron OS. And we achieved a big leap in the portfolio streamlining, coming to that later on in more detail. And on top of that, we paid a dividend of 60 cents a share in the second quarter to all our shareholders. And after the second quarter, we also announced a 3-digit million contract with SOCF in July, in particular in our very strong growing train segment. Let's have a look at the KPIs for the first 6 months. Revenues basically stood on the same level with around 800 million of revenues. If we compare those revenues to the order intake, you see that we got 981 million of booked revenues, implying a book-to-bill for the first half of this year of 1.26. So the growth in the first quarter was even larger, implying a growth of 26%. The gross profit slightly declined on the back of the portfolio streamlining by 2.7% to 319 million. The EBITDA had a strong leap forward, mentioned that before, from 82 million to 146 million, a growth of 78%, including the 48 million of one-off effects from the portfolio streamlining. So you have to deduct it, you get to basically around 100 million of EBITDA for the first half of this year. The net result after non-controlling interest rose by 136% from 38 million to 89 million, or from 61 cents a share to 145 cents a share. And the operating cash flow, it also reversed in the total of the first half. It was minus 16.8 million for the first half 24, and it's now plus 16.3 million for the first half of 25. Even though we have further reduced factoring, so if you deduct the effect from factoring, you get to another positive impact of around 15 million in operating cash flow. So the total operating cash flow was around 30 million based on that information. Let's have a brief look at the group balance sheet for Q2 in comparison to year-end 2024. You see that equity rose slightly to 688 million. Equity ratio also increased by 2.3 percentage points from 35.8% to 38.1%. The total net debt temporarily increased in the course of the portfolio streamlining from 163 million to 255 million, but we expect a significantly lower net debt at year-end already. And the working capital further declined. It was at 350 million. At year-end, it's now at 307 million, basically at the end of the second quarter. Driven by obviously the inventory decline, which went from 373 million to 341 million. Let's compare the major KPIs over the last 2 years since the first half of 2023, since we did the focusing on IoT after the sale of the IT service business. The revenues grow by 45%. Obviously, you see the effect of the growth of the IoT, even though the portfolio streamlining is not fully visible yet. It's visible, but it's not fully visible yet. The gross margin increased slightly from 41% to 42%, similar to the first half of last year. The growth is due to the transition in the segment mix and the introduction of new products like Kontron OS and AI Shield. And the EBITDA had a strong growth from 61 million to 146 million. You have to deduct obviously the one-off effects, but then you're still at around 100 million of EBITDA, still a strong growth. You see the impact of the portfolio streamlining in the first half of 2025. The net profit grew from 34 million to 89 million. Operational strong as well, but not finalized yet. The equity ratio was at 47.2% before we started the acquisitions. Then it went down to 33.7%, and it's now rising again, and we're targeting to get to more than 40% by 26 already. Again, the working capital has been on a low level of 165 million. Then we acquired several companies, in particular the acquisition of Katik contributed to the growth of working capital. In between, it was around 450 million, and we have started mid last year a shrinking process, basically shrinking every quarter since the first half of 24, and now we stand at 307 million of working capital. The operating cash flow was positive 7.3 in the first half 23. Then it became negative upon the acquisition of Katik, but we have now managed to reverse the trend again and stand even before reduced factoring at 16.3 million, would have been 15.7 million higher, as mentioned before, if adjusted by reduced factoring. The number of employees, full-time equivalents, stood at 4,500. It increased to 7,700, and it's now just below 7,000. We expect a further decline as we are cutting costs where we feel it makes sense and it's necessary in order to achieve a sustainable profitability. There are still, though, 3,200 engineers, the technological backbone of our success. We had net cash of 105 million at the end of the first half of 2023. We have now a net debt position of 255. That will decrease again once we realize the cash inflow from the disposal of the com business. Let's get to the next slide. You see the massive increase in the design wins in the backlog, reflecting on our business development and also of the future expectations for our business. The backlog rose from 800 million to 2.3 billion after the first half of this year, a strong increase. And the design wins, meaning tenders we have won, but where no binding contracts are yet in place, they increased from 2.4 billion to 7.7 billion. You see, we have also inserted some of the most recent announcements that this is driven by transportation a lot. The transportation business is bringing a lot of momentum to our business. We are market leader in the transportation business, in the high-speed train business in Europe already, with a market share of more than 50%. And we were able to announce several contracts. The last announcement, even a 3-digit million contract with the French railway group SNCF. Let's get to the streamlining of our activities in more detail. We have sold parts of the com business and made a capital increase due to tax reasons for the other part of the com business, computer modules. They were acquired in 2004 by Kontron Europe. And then basically 21 years later, we have decided to merge it again with the initial source, with Congatec. So Congatec and Jumptec, or the com business core, they used to be together. They used to stick together. They still have the same headquarter in Deggendorf, and we put those businesses together again, enabling Congatec, which is owned by DBAG, to become world market leader in the com market. They will have significant synergy effects from the integration of the com activities, but we still own 4% in that business after the capital increase in Germany. And after the carve out, we have carved out the business first in the first quarter 2025, and then basically combined it with Congatec in Germany, in the United States, and in Asia and Malaysia. We will still work with Congatec together in order to upgrade the products. We will add Kontron OS, our own operating system, and Kontron Grid software to the com modules also of Congatec. We have as a USP the opportunity to work together and get Kontron OS and the Grid IoT on the Congatec modules with very high security standards. They are offered to the generic high volume channel of Congatec, around 2 million pieces per year. Midterm, this will lead to higher profits for both partners. Let me show you our projections. After the disposal and the deconsolidation of the com business, we will lose 60 million of revenues this year because we've deconsolidated for the second half of this year. And we will probably in the second half not see around 5 million of EBITDA because that belongs to Congatec now. At the same time, we've realized 48 million of one-time profit from that transaction. Next year, we will already start to compensate with the additional revenues as we will work together in software, but also in logistics and partially in production with Congatec. That will lead to revenues of minus 30 million compared to how they would be the revenues if we have not disposed of the com business. The EBITDA will already increase. It will be already higher due to our increased collaboration on various areas by 4 million. By 2027, we'll add 10 million of revenues and 12 million of EBITDA compared to the status before. The other operating income we generated from the com deconsolidation was 95 million, but we had special costs of around 47 million, resulting in the overall profit of 48 million for the entire com business. We've booked taxes of around 5 million for that. With regards to the different segments, that's resulting in 44 million for the segment Global, 12 million for the segment 44 million for the segment Europe, 12 million for the segment Global, and 8 million for the Software and Solutions segment. We still expect 126 million of cash in 2026, September 2026, and we get interest in between on those expected cash inflows from Congatec. Let's have a brief look at the different segments. You see that segment Europe, obviously you see the impact from the portfolio streamlining. The com business was integrated in Europe and global. You see the effect there. The segment still represents around 50% of group revenues. It's the powerhouse of Kontron, even though margins are slightly lower, around 10% compared to the segment Software and Solutions. And we started installing Kontron OS on all devices of Kontron of the Europe segment, meaning we'll achieve higher margins in the future based on that. On the segment global, you see that it was also impacted by the transaction as we sold the Malaysian com business to Congatec. The overall margin is similar to segment Europe, around 10%, slightly below. Represents around 15% of group revenues, but we expect to expand this to 25% in the next 4 years. What is driving the segment global? It's North America, defense and aerospace, and in Asia, where we cooperate with Foxconn in technology. We have some headwinds by the Buy Chinese strategy, meaning that Chinese market is not doing so well for Kontron, but we're working on that with Foxconn in order to get that running again. We're not impacted by the tariffs, very important for us, as we have local R&D and production in the US. We have a production line in Alabama, and we have a production line and R&D in San Diego on the West Coast. Now, last but not least, you see that this segment is showing enormous growth. This segment represented only 4% of the revenue base 4 years ago. Now it represents already 35% of our revenue base with around 17.7% EBITDA margin. So this is, and that used to be around 15%. So the margin in this segment is growing also consistently in that segment. And this segment growth, segment software and solutions, is driving the entire Kontron business and the margin increase for Kontron. We expect more than 50% recurring revenues within the next 2 years. And we achieve already 50% of recurring revenues and software level agreements, service level agreements of up to 15 years in that business currently. The share of technology, especially software, is already 60%, and we're technology leader in that segment, particularly for transportation, aerospace, and defense. And we also have a foothold in the green tech segment. A brief look at the main technologies which are driving the growth of Kontron. That is high-speed trains. I mentioned that already briefly. High-speed trains with a market share of more than 50% in that area. This segment is going to drive further due to increased train networks in Europe and increased subsidies also of the European Union for high-speed train networks. And by the shift of technology, so the trains are shifting from a very old 2G standard, GSM-R, to FRMCS, Future Railway Mobile Communication Standard. And that switch in technology will drive our revenue significantly over the coming years. There's only one big European player as a competitor, it's Nokia, but for them it's not so much at the core of their interest. So therefore, we expect to maintain our strong position in that specific industry for a longer time. Defense aerospace is growing a lot, has been growing a lot over the last year. It now represents below 10%, still below 10%, but this is going probably above 10% next year in terms of revenues, with an EBITDA margin of also 20%. With high-speed trains, we are able to generate EBITDA margins of around 25%. We provide VPX modules, which are sustainable to heat and shocks. And they are integrated in armored vehicles, for example, also Rheinmetall tanks. We also have chargers for e-cars. We are a customer of Volkswagen Group. We're not a customer, we're a supplier of Volkswagen Group. We're supplying them with the white label wall chargers for all Volkswagen brands. It's a 100 million business with 12% EBITDA. But with Volkswagen Group, we're also supplier to Volvo. We have a relatively strong foothold. And then automotive network access devices. This is a business which is going to grow significantly over the coming years because all the car makers are going to implement 5G modules into their cars. It's it could be a 1 billion euro business within the next couple of years, as we are the only non-Chinese supplier beside LG. Very briefly, look at the forecast. We expect 1.8 billion of revenues and more than 270 million of EBITDA, organic growth of more than 14% in terms of EBITDA. So I'm little time left, but I'm open to your questions now and happy to answer also after the call if there are some questions remaining.
Thank you, Clemens. As always, there's a lot of going on at Kontron, so we had more time for the presentation. I also suggest that given that we have quite a lot of questions in the audience, that we will circulate the questions back to you and maybe then also to the audience after the meeting, because we only have 3 minutes left for the questions. But maybe just briefly, let's start with one of the first questions which we arrived, and that's regarding your goal to increase the EBITDA margin to 20%. When do you expect that to be achieved, and by increasing significantly the SaaS software sales from Kontron OS license revenues?
We will have a margin of around 20% in the segment software solutions relatively soon, probably within the next 2 years. And as the segment software solutions is driving the entire business, we'll have represent more than 50% of the revenue base within the next 2 years. This is also driving the total margin upwards. It will probably take until 2030 until we achieve 20% for the entire group, but the tendency is very clear, and this is driven by software solutions and the software revenues, which will start to kick in over the next 2 years.
Okay, perfect. And how much software license will be on the market in the first half of 2025?
We currently have around 4 million of licenses on the market already, but we don't charge for that. So currently we're spreading our licenses with the target to get to 30 million devices with Kontron OS implemented on it, and we'll start charging for the security patches and for software updates after 2 years.
Very good. And I think we have just time for one small more question. Can you provide a breakdown of your order backlog into trains, defense, and software?
The software backlog is relatively small, as we generate around 100 million of revenues from software currently, and this is not reflected in our backlog, so it's pure opportunity, because we don't have fixed orders yet for hundreds of millions. So, but for the train business and for defense, they represent together already 40% of our backlog.
Very good. Well, Clemens, thank you very much. We are running out of time. It's 10 o'clock. We will have the next meeting, which is Viscom. You will find the link here in the chat box below. And as I mentioned, all the questions we will circle back to the participants. Thank you very much for the interesting presentation. And all participants, hopefully you have some insightful meetings later on today. Thank you very much.
Thanks a lot, and